Let's get across the market open now. Kyle Ryder joining us from capital.com. Kyle, welcome back. Great to have you back here at AusBiz. Let's get across what happened overnight. Investor sentiment certainly buoyed on the prospect potentially of Iran-US talks resuming, yet we saw that blockade begin from the US Navy.
Yeah, I think the markets are really accentuating the positive and almost eliminating the negative here and buying into effectively still rhetoric from the Trump administration that the Iranians have reached out to continue talks, and that some of that, might even include a revision from the Iranians of whether it requires its uranium enrichment program. These things that, seem quite unlikely in many respects, and one would assume that when Trump says that the Iranians have reached out, it still remains through back channels from countries like Pakistan and Turkey and Egypt and what have you. But nevertheless, there seems to be this real desire, if wishful thinking or otherwise, to buy into the fact that both sides are strongly incentivized to make a deal and are hopefully moving in that direction, considering this very tenuous ceasefire still seems to be holding despite the developments over the weekend where peace talks have fallen down. But as you noted, we're still in a situation where we've got this blockade of a blockade in the Strait of Hormuz now. Global energy markets are still reeling from the impacts of this, and there is that countdown clock that the longer this drags out, the bigger the impacts could be, and that will inevitably have to be discounted as higher inflation, higher interest rates, weaker earnings on Wall Street, for example, and that's a significant risk. But for now, again, the markets are buying into headline risk, positive headlines, and that was the story of the first day of the trading week.
Yeah, it looks as though markets just want to go up regardless, doesn't it, Carl? Because the S&P 500, in fact, has wiped out those losses since the war began.
Yes, and that's a curious situation, and I'm feeling somewhat skeptical about the equity market's ability to price this in adequately, considering it was caught off guard so significantly before the crisis, even though, Blind Freddy could obviously see that there was something going on in the Middle East. But this now kind of gets placed in the context of the earnings season, which, it has to be said, is expected to be incredibly strong, not just from the earnings expected to be delivered by corporates across the S&P 500, but also guidance for the quarter ahead, Q2, which is expected to deliver earnings growth of around 20%, which is historically elevated and consistent with a very strong bull market. So on the one hand, you can say that, well, perhaps the analyst community, perhaps the markets are pricing in that equities are going to be resilient here. The flip side is that, notwithstanding the fact that this drawdown in the S&P 500 anyway recently has made, on the surface, valuations look more attractive, it doesn't seem to be discounting the impacts of an energy crisis vis-a-vis higher costs and certainly weaker growth weighing on top line as well. So it's a fascinating dynamic that we do have Wall Street so optimistic here. It makes me think that we could be set for a bumpy couple of weeks, if not just for the crisis in the Middle East, but also for what companies could tell us about the crisis in the Middle East when earnings really starts to pick up.
And certainly no resolution to that energy crisis, given now, of course, the US military has instigated that blockade, preventing Iranian ships from travelling through that strait. But you take a look at the oil price at the same time, it's sort of remaining below 100 US dollars.
Yeah, I think this is one of those situations now where you sort of have to look at which oil price matters and which you should be paying attention to. And of course, a concept that we're all becoming much more familiar with as energy market tourists is dated Brent, and what physical oil is actually $40 per barrel there, as far as Brent is concerned, only a couple of weeks ago. But it's still at levels that are consistent with an energy crisis, and one that is at levels much higher than what's being conveyed in the front end of the futures curve. So prices can, maybe if not lie, certainly mislead to some extent. And yes, prices came off their highs yesterday, but once more, they aren't reflecting probably the true strains on the energy market. The fact that if this drags on even further, there's going to be a cliff where more or less supply becomes significantly disrupted, and that will have to be discounted. And then, finally on top of that too, that even if things go well, oil prices at $100 after such a significant change will have to manifest again in weaker growth and interest rates higher than they would otherwise be. And that's still something that has to be more or less discounted, or at least factored in as a risk to the markets, and could cause further volatility.
Interesting to see what's going on elsewhere in terms of, well, I was going to say risk assets, but I was taking a look at gold. Certainly struggling to make significant moves, but Bitcoin has taken a big leg higher as well.
Yes, and Bitcoin has been remarkably resilient through this entire crisis, and one would suspect that it's a little bit like the days of old, especially sort of early in the crypto or Bitcoin adoption cycle, where talk of sanctions and basically pariah states being further isolated from the global economy had meant that Bitcoin would be a bit of a play on that, assuming that there'd need to be alternative payment systems and stores of value required from sovereigns to get around sanctions or other sort of geopolitical risks. One story that is worth noting over the last few days is that apparently the Iranians were demanding payment in Bitcoin for the tolls that it was charging for the ships trying to get through the Strait of Hormuz, obviously because the Iranians are exposed to these sanctions, have been for a very long time. Those sanctions are only becoming more restrictive because of this particular conflict. And if this deal passes or does not pass, one of the terms, of course, is Iran having sanctions lifted off of it and being able to access frozen assets. If that doesn't materialize, again, the appeal for Bitcoin here, at least at the margins, holds up reasonably well. So when you look at the kind of correlations across the market here, which is normally if oil prices are up, stocks are down, the US dollar is up and gold is down, Bitcoin hasn't really bought into that sort of one war trade. And if anything, it hasn't behaved as a risk asset. It's actually behaved as perhaps what it was always designed to be, which is sort of an anti-fiat hedge, a hedge against trade fire effectively.